Why Sidra could follow or even beat Pi Network's price performance. For years, Pi Network has dominated the conversation around mobile crypto mining, building one of the largest crypto communities in history before even fully entering open markets. Millions of users mined Pi on their phones, creating massive anticipation, speculation, and eventually significant price volatility after partial listings. Now, Sidra is emerging under a similar mobile mining and faith-based finance narrative. And many investors are starting to ask a serious question: can Sidra follow Pi Network's explosive price performance or even outperform it? To understand Sidra's potential, we must first examine what made Pi Network successful. Pi didn't explode because of advanced technology at first. It exploded because of distribution, psychology, and timing. Pi created a feeling of free ownership, onboarding users globally with zero financial risk. By the time Pi reached exchanges, millions already believed they owned something valuable. That belief alone created instant liquidity, wild price swings, and massive speculative demand. Sidra is now building a similar foundation, but with a major difference. Real financial infrastructure is already being deployed alongside user growth. One major reason Sidra could rival or surpass Pi is utility before speculation. While Pi spent years in a closed ecosystem with limited real-world use, Sidra is rapidly integrating Islamic finance, asset-backed tokens, decentralized exchange access, and structured investment vehicles. The Sidra chain ecosystem is not just about mining. It is positioning itself as a full, Sharia-compliant financial blockchain. This gives Sidra a stronger, fundamental base compared to Pi's early, purely community-driven valuation. Another powerful factor is token economics and scarcity. Pi's supply uncertainty remained a major problem for years. Many users had no idea how much supply would circulate at launch, which later caused price instability and long-term selling pressure. Sidra's ecosystem, while still evolving, is attempting structured releases through mining, swaps, launches, and ecosystem projects. If Sidra successfully limits aggressive inflation while expanding demand through real applications, it could outperform Pi's post-listing price behavior over time. Geographical expansion also matters. Pi Network went viral in Africa, Asia, and parts of Europe. Sidra is following the same grassroots pattern, but with a stronger foothold in Muslim-majority regions where Islamic finance demand is massive and mostly underserved in crypto. This niche alone represents a multi-trillion-dollar market that Pi never directly targeted. If Sidra becomes the default blockchain for halal DeFi, that narrative alone could drive sustained demand far beyond speculative hype. Sidra also benefits from learning from Pi's mistakes. Pi users faced long delays, KYC congestion, regulatory uncertainty, and slow ecosystem rollout. Sidra is accelerating faster by structuring projects like Sidra DEX, token launches, ecosystem swaps, and early-stage investments. This constant flow of activity keeps users engaged and prevents the stagnation that hurt Pi's market confidence during its long waiting phase. Another overlooked factor is market timing. Pi entered the market during a period of heavy regulatory fear and declining retail confidence. Sidra is positioning itself in a phase where Web3 infrastructure, real-world asset tokenization, and regional blockchain adoption are gaining renewed momentum. If Sidra achieves even moderate global exchange exposure during a bullish cycle, the price impact could be far more aggressive than what Pi experienced at launch. However, it's important to address reality. Sidra is not guaranteed to outperform. Pi community size still heavily favors Pi. Liquidity depth, exchange listings, regulatory clarity, and developer adoption will ultimately decide Sidra's long-term price performance. If Sidra fails to attract institutional-grade projects or real business usage, it could struggle to maintain value beyond speculation. But if Sidra executes correctly, combining mining, Islamic finance, DeFi, decentralized exchange trading, asset-backed investment products, and global community onboarding, it could create a stronger and more sustainable price structure than Pi. Instead of relying purely on hype-driven pumps, Sidra's value could be supported by transaction volume, project launches, cross-border payments, and ethical finance adoption. In simple terms, Pi proved that community can create massive value. Sidra is now attempting to prove that community plus real financial infrastructure can create even greater value. If successful, Sidra may not only follow Pi's price performance, it could surpass it in terms of long-term sustainability, ecosystem depth, and real economic impact. For investors, the key difference is mindset. Pi rewarded patience through speculation. Sidra will likely reward patience through utility-driven growth. Those expecting instant riches may be disappointed, but those positioned early in a functioning financial ecosystem may benefit far more over the long run. Final thought from CryptoGrok. Sidra doesn't need to copy Pi Network to win. If it continues building real finance on-chain while growing a loyal global community, it may end up doing something Pi never fully achieved, becoming a true financial blockchain rather than just the biggest mobile mined token in history.